Okay, so this question is question November 2022 FAR 270. It is regarding revaluation of depreciable and non-depreciable asset, and this will involve first and second revaluation. First is what you call initial revaluation, and second one is the subsequent revaluation. So these are the requirement that I've already highlighted earlier. Yeah, revaluation of the building to be calculated either surplus or deficit on 1st of July. So if you look, the year end of the company, it ends on 30th of June every year. So because they prepare the financial statement every 30th June. So you are asked to prepare the journal entries for the revaluation of land and also building for the year ended 30th of June 2022. So let us see what are the relevant workings for this. Let us just read the question first. Alfil is a company related to processing of recycled product, and as at 30th of June 2021, you have these notes to the account, which is the notes to the PPE, notes to the property, plant and equipment of the company, which shows that the cost of the land, so I'm going to use green for the cost of the land. So cost of the land were 20 million, and the cost of the building, so building will be yellow. The cost of the building is 70 million. And at the same time, you have the information at the bottom here on the accumulated depreciation of building. So accumulated depreciation of building on that date. On that date refers to the one on 30th of June. It was 18.8 million. So you have the cost of the building, which is 70, and the accumulated depreciation is 18.4 million. 18.8, sorry. So the cost of the land without the accumulated depreciation, because land is non-depreciable asset. So this is one more important thing where company here, Alfil, adopt revaluation model for its PPE. So let us look at the information on revaluation here. So I will use blue for land, and I will use different color for building. So I will start with building first. You have the information here. So I start with land. Land is similar. So start with land. So I'm going to use blue as I said. So you have the information here, 1st July 2021. So 1st July 2021 is actually beginning of the year. So 1st July 2021, the fair value of the land was decreased by 300,000. 300,000 here, the decrease here means this is the deficit. And this is the first time that it was being revalued. So this is the revaluation deficit for the first time. So the deficit here is about the first revaluation. So under MFRS 116, paragraph 39, deficit must be debited to the profit or loss and credited to the land. And for land here, there are no depreciation. So I start with land. I'm not going to do things for building yet. So that was for the first revaluation. So for the first revaluation, the deficit in terms of journal entry, you are going to go and debit the revaluation deficit, and you are going to credit land. That was on 1st of July, and this will go to the SOPR. I've just show you the simple journal first. And then you have another one on 30th of June 2022. So this is somehow in the same year, but this is at the end of the year. And this is your second revaluation. Class, are you with me? Are you still with me?
Yes.
Yes, all right, thank you. So you have the fair value of the land and building was 21 million. So you have been informed what are the fair value. So earlier on, you are informed what was the deficit, but this was the fair value, and the fair value was 21 million. So this is actually the fair value 2. Why fair value 2? Because this is the revaluation for the second time. So revaluation for the second time. So that was the fair value 2. Fair value 2. So the fair value 1 will determine it later, but for your information, fair value 1 will be slightly lower than the carrying amount because there was a decrease from what you have here, the decrease of the land from 20 million, it was decreased by 300,000. So the fair value one, if you were to find out for the land, is actually 20 million minus 0.3 million, which is the deficit. So you will have fair value one, 19.7 million. Fair value two is given here. Right. Okay. So for the second revaluation, that is what happened. So let us look at the requirement. So if you can see that you are not asked to do any debit or credit for the revaluation of the building, for the revaluation of the land. However, you are going to do the journal later when you go to 30th June 2022. So we just KIV that first. But for your information, you will notice that this is the situation where at first, I'm going to draw a line for you. You have the first revaluation here, where the fair value, I have mentioned earlier, it was 19.7. And you have the carrying value. Carrying value is the cost of the land. Since the land was not depreciated, so that will be our carrying value one, which is 20 million. And that difference of 0.3 million is your deficit. So this is first deficit or initial revaluation. First revaluation. And then the second revaluation, first, now this is subsequent or second revaluation. This now that I mentioned earlier. Subsequent revaluation here is the second revaluation. So you may also have third revaluation, fourth revaluation, and so forth. But this is second revaluation. So you will compare the fair value given, fair value number 2, sorry about that. Okay, fair value number 2 is the one that I just labeled just now. If you can see, fair value number 2, that was 21 million. And you will compare with the carrying value. So this will be carrying value number 2. And fair value before that will be your carrying value number 2. So that would be 19.7 million. So from there, you'll be able to find out that the second revaluation was a surplus. Why was a surplus? Because fair value is greater than the carrying value. And fair value is greater than the carrying value. In the first situation just now, the carrying value is more than fair value for the deficit. But for the surplus, it is where fair value is greater than carrying value. So for that surplus, so that the accounting treatment under MFRS 116 will depend on whether or not there is a previous deficit. We'll deal with that later. Now let us look at the requirement of the question. We're now going to move on to our second item. Our second item is our building. So here you have the building. You are informed on the first revaluation. Here is the first revaluation for building. You are informed that the fair value of the building, was 55. So fair value here is fair value 1 for building. Remember, red is for building, 55 million. So what you need to do is you need to go and find out what is the carrying value on that date. I will show you in a short while, and you will be able to see whether there is a surplus or a deficit. That was the first revaluation. So we'll be looking into that. Right. So let's just look at that here. For the case of revaluation of building. So for revaluation of building, if you can still recall, I'm going to switch between questions and the answer. So you can see the carrying amount. For you need to first find out what is the carrying amount on the revaluation date. So revaluation date, the first revaluation was on 1st of July. We are going to do for building. So you have the cost here, 70. and you have the accumulated depreciation 18.8. So what you need to do is to find out the carrying amount on 1st of July 2021. To do that, you will take the cost, remember the cost given earlier, 70 million, and you will remove with the accumulated depreciation that was given. So the one given to you has been calculated for you. If it is not given, you may have to go and do the calculation yourself. So after you have done that, you will find out what are the carrying amount. So the carrying amount should be the carrying amount on the date of the first revaluation. Remember, first revaluation, the amount was 55 million, 55 million for the fair value. So the carrying amount here is 51.2. So therefore, on the first revaluation, you can see fair value exceed the carrying amount. So you have 3.8 million. So that 3.8 million is what you call initial revaluation or first revaluation. And under MFRS 116 paragraph 39, the revaluation surplus, or it is called the increase, shall be recognized in other comprehensive income and accumulated in the equity. So what does it mean? It means that you should go and credit that to the equity section, which is under the heading revaluation surplus. So you're going to credit asset revaluation reserve for the item building, and you are going to go and debit the item building. At the same time, okay, so I have put here some information regarding the accounting treatment. So let us look at what are the accounting treatment for that. So the first one, you can see that the revaluation will be, I have prepared the journal for you on 1st of July 2021. This is actually answering also the part relating to requirement C. So before that, you have answered requirement relating to requirement number, just now was requirement for, yeah, revaluation of the building. So you have already found out it was a deficit. So you have answered this part when you do this. So this one, 3.8 million. And this 3.8 million is the deficit. Sorry, this is not a surplus, but it was a deficit. It was a deficit. So yes, it was a surplus, sorry. Yeah, it was a surplus. So it was a surplus 3.8 because fair value is more than the carrying value. So 3.8 million. So that 3.8 million, what you need to do is you need to go and record that here. So you can see here, this is the journal entry for building. So I color it a different color for you. So I will put it blue here. Okay, the one blue, and I'm going to change the background. Okay, the one in yellow here. So first you debit building with 3.8 million, right? Okay. The second one is that you will credit the asset revaluation reserve, which is called building revaluation reserve, also with 3.8 million here. Okay, on top of that, on the same date, which is on 1st of July, it happens on 1st of July, so it is the same date here. You also need to go and eliminate the accumulated depreciation of the building. So not only that you need to record the surplus, you also need to eliminate this accumulated depreciation of the building. So accumulated depreciation of the building that you will be eliminating here is given already in the question. Which one here? It is given here. So just take this 18.8, and that should be eliminated. So if you eliminate, you will go and debit the accumulated depreciation building, the one here. Okay, debit. And you will go and credit the building. So that was in terms of the journal entries. So as you do the workings, you can do the journal as well. Okay, some question, I am doing some bonus answer for you. Some question may also ask you to explain the accounting treatment. When you are asked to explain the accounting treatment, you cannot write numbers or write calculation only. You must write them in sentence. And your accounting treatment should be within what is provided under MFRS 116. So on 1st of July, number one is that you need to explain this item first, this one. this 3.8 million, what should you do with that? And number two is to explain about the accumulated depreciation. So the number one, the revaluation surplus of mentioned how much? 3.8 million on initial revaluation is credited, because just now we go and credit to the building revaluation reserve, and that shall be recognized in other comprehensive income. What means here is that in the SOPL, under other comprehensive income, you should include the revaluation surplus, meaning that somewhere after profit, after tax, include that. And then the second accounting treatment or the explanation is to explain on what to do with this. So just now you just debit the accumulated depreciation. So here also you will say the same. The accumulated depreciation of the building, how much? Mention the amount, 18.8 million prior to the first revaluation is being eliminated. Right. So the first one is the surplus that you explained. Second one is the accumulated depreciation. This is just a bonus answer. The one that I put here, bonus answer here. Yeah, in case the question asks you. But the question do not ask you this. The question asks you to calculate surplus or deficit and to also do journal entry for the year ended 31st December 30th June 2026, meaning that you are asked to do the journal entry for 1st of July up until 30th of June 2022. So for the year ended mean for the one whole year. Okay, that was for the first one for building. And earlier on when we were doing for land, remember we did for land earlier, there was a deficit, right, of 300,000 for our first revaluation. Let's go back to the timeline here. So here, deficit, right? And then the second one is a surplus. So for the first one, deficit, you will record here. So it is here where you go and debit revaluation deficit. It will be in the SOPL, 300,000, and you will credit land 300,000. That happens on 1st of July. Okay, 1st of July for that revaluation. This is required by the question for you to do the journal entry in requirement number 3. The next one, you are also asked to do this, if you can still recall the question. You are asked to calculate the carrying amount. So carrying amount is actually cost minus accumulated depreciation. Yeah, at this point, because you have not earned impairment. If you learn impairment, you may have to also include accumulated impairment loss. But in this question, there are no information on impairment loss. That was true for cost model. However, for the revaluation model, the carrying amount may not be cost. It will be the revalued amount minus accumulated depreciation minus accumulated impairment loss. So we are going to focus on the second part, which is the calculation of carrying amount on 30th of June 2022. So when you calculate the carrying amount on 30th June 2022, bear in mind that on 30th of June 2022 here, there is another revaluation that took place. For the building, there is a revaluation where the fair value of the building, this is fair value 2. Fair value 2 here for the building is 52 million. And you need to go and find out what is the carrying amount or carrying value 2. Remember, we need to go and find out that by trying to go and look at what is the revalued amount before that, and then go and find out what is the accumulated depreciation. So you are informed here regarding the depreciation that building is depreciated based on straight line method over a period of ownership. So meaning to say that this is monthly basis. And there is no depreciation for land because land is non-depreciable asset. So let's just calculate the revaluation first for us to find out what is the carrying amount of the building. So you want to find this actually. What is the carrying amount of the building? So to find the carrying amount of the building, number one, you need to go and check if there is any revaluation before 30th of June. Or maybe after 1st of July, is there any revaluation? So just now, 1st of July, revaluation was a surplus 3.8. So earlier in the question, you have this, the revaluation of the building for the second time happens on 30th of June and it was 52 million. So therefore, you put that 52 million here. Okay, you put the 52 million here. And then you will compare with the carrying amount. So if you were to find out the carrying amount, you need to find out the accumulated depreciation. So to find the accumulated depreciation, you need to go and take note that the depreciation before that we have already eliminated. Depreciation before that we have eliminated, the one here. Now we are going to recalculate the depreciation of the building based on the revalued amount. So this one is the revalued amount. This one here, I'm putting a different color. Okay, this one is the revalued amount, 55 million. So that 55 million, yeah, 55 million, I put a different color, okay, blue. That 55 million is what you call revalued amount. So that revalued amount is the fair value as at 1st of July, 55 million. Then you find out the accumulated depreciation. To find out the accumulated depreciation, take the revalued amount. It's not the cost, revalued amount. I put here revalued amount divided by the remaining useful life. Remaining useful life. Before this, the useful life was given in the question. Let's check the useful life. So useful life given in the question was 26 years. You have here, you are informed on 1st of July 2021, the remaining useful life of the building was 26 years. So what you will do is, you will take, you find out the accumulated depreciation by taking the revalue amount, 55 million, divided by 26 years, the remaining useful life, as at 1st of July. Yeah, as at 1st of July. And therefore, you got 2,115,385. So this one is the accumulated depreciation starting from 1st of July up until 30th of June 2022. You reduce that, and therefore you will be able to find what is required in the question, which is the um, the carrying amount as at 30th of June, and that is the requirement here. This requirement here, number 2. So you have 4 marks already for that particular calculation. 4 marks. 4 marks and 2 marks are secured. So that carrying amount given calculated here, 52.884615. So that, however, what you need to take note is that you also need to do the journal entry as required by requirement C. This one, requirement number 3. Prepare journal entries for both revaluation of land and revaluation of building for the year ended 30th of June 2022. So meaning that you need to do journal entry, everything be first, starting from 1st of July 2021 up until 30th of June 2022. So this one we have done it earlier just now, right? And now we are going to do all the journal entry that happened after 1st of July up until 30th of June 2022 relating to revaluation of land. So for this, if you compare the carrying amount with the fair value for the second revaluation, where is the fair value? The fair value is here, yeah, which is 52 million. So if you compare with the carrying amount that we just calculated, you can see that you have a revaluation deficit. Why revaluation deficit? Carrying amount is greater than the fair value. So under Mfrs 116, paragraph 40, the decrease in revaluation, right? If it's this one happen on the subsequent revaluation. So if it's first revaluation, we will debit straight away to the profit or loss as revaluation deficit. That was in the case of land. However, in the case of building, the second revaluation was a deficit. The first revaluation was a surplus. Are you still with me, class? You have question? Are you following me?
Yes, madam.
Okay. I hope you have watched the videos that I suggested earlier so that you have better idea here. So you are informed under MFRS 116 paragraph 40, the decrease. Decrease refers to revaluation deficit where fair value is less than the carrying amount or carrying value shall be recognized in other comprehensive income to the extent of any credit balance existing in the revaluation surplus. And if there is not enough balance, the remaining deficit will be expensed off to the shopper. What does that mean? It means that on 30th of June, so I put the counting treatment here, there is a revaluation deficit of 884,615. So if you, before you go and debit straight away to the profit or loss, you must first check whether there is a previous surplus. So you can see here there was a previous surplus of 3.8 and you have a deficit of 884,615. The balance in the surplus must be first utilized or reversed to record the revaluation deficit. So under MFRS 116, it means that you need to first debit this revaluation deficit, not to the profit or loss. You will do just like what we have here. This one, you are going to debit that to the asset revaluation reserve, which is building. Uh, if it's enough, you do not need to debit profit or loss for the revaluation deficit, and you will credit the item building. So in our case, if you check, the balance is 3.8 in the revaluation reserve balance, or which is the first revaluation. In the second revaluation was a deficit. So there is enough previous revaluation surplus balance, correct? So deficit, how much? The deficit, the whole deficit, the deficit 884615 is debited. Where to? To the building revaluation reserve account. So you reverse it. So meaning that before this, you debit the building, you credit ARR. Now you go and debit the ARR building and you will credit the building, and you do not need to debit the profit or loss or the revaluation deficit to the shopper because the balance is more than enough. At the same time, the accumulated depreciation that you have just calculated also must be eliminated. So accumulated depreciation before the second revaluation, this one, yeah, 2115385, is also eliminated against the gross carrying amount. And at the end of the year, the carrying amount of the building is at the revalued amount of 52 million. Okay, so let's look at the rest of the journal entry here. So the second revaluation for land is here, is still in blue. Yeah. So for revaluation of land, so for second revaluation of land, I've just let us just go back to this part. This one, right? This is the second revaluation of land I'm focusing on here. So you will have 1.3 million. The second revaluation was a surplus of 1.3 million. So first revaluation was a deficit. Second revaluation was a surplus. So let us check what we have here. So the first revaluation, a deficit. So let me just put a different color here. Okay. This color, red, 300,000. So the second revaluation, you have 1.3, which is a surplus. So this 1.3 cannot be straight away credited to the land revaluation reserve. What you need to do is you must first reverse the previous deficit. So previous deficit here is recognized in the profit or loss 300,000. So on second revaluation, you need to go and reverse the deficit. Reverse means before this you debit, now you would credit. So you would, before this you debit the SOPL, now you would credit the SOPL 300,000. So meaning to say that if you have 1.3 million of your second revaluation here, and this is a deficit, sorry, that is a surplus, okay, second revaluation. So before you go debit straight away to the, you go and credit them to the land revaluation reserve, you must first credit them to SOPL. How much? So go and check previous deficit. Previous deficit was 300,000. So that should be credited with 300,000. The one that cannot be covered between 1.3 and 300,000 is 1 million. That 1 million is the one that you would credit to the land revaluation reserve. So this is the journal entry here. So debit land on second revaluation, 30th of June, credit SOPL, where it will be later reversed in the SOPL for that year, 300,000 to reverse the previous deficit, and credit land 1 million. Okay, that was for land. For building, this is the journal entry for building. We have done the building just now. So the first one is to go and check what is the revaluation surplus and what is the case here is not a surplus, it's a deficit. So let's just check that. Okay. So the depreciation that you charge in that year before the second revaluation, this is on 30th of June 22, is 2115385, which is this one here. It was your depreciation, you provide, but later you eliminate. So first you provide, later you eliminate. So there are two entries there. So debit the building, depreciation building, 2115385, credit accumulated depreciation building 21115,385. Do that. Second one is to eliminate. This one is to provide the depreciation. This one is to recognize current year depreciation. Second one is to eliminate second one here, yeah, to eliminate the previous, to eliminate the accumulated depreciation, eliminate accumulated depreciation. First you provide, now you eliminate. Why do you eliminate? Because you do revaluation. Depreciation before second revaluation. Why before second revaluation? Because the one during the first revaluation has been eliminated much earlier. Yeah. So to eliminate, so that was through 211,385, and the one here is to recognize the second here is to recognize revaluation deficit. And you can see the revaluation deficit was not debited to the SOPL but was debited to the building revaluation reserve, because building revaluation reserve has more than enough balance. You can see here paragraph here said, to the extent any credit balance existing in revaluation surplus in respect of that asset. So if you have enough balance, you do not need to utilize or to debit that to the profit or loss as an expense if you have enough balance. Our case here is enough. If it is not enough, let's say here is the figure is 4884615. Let's say deficit was 4884615. That will need you to go and also recognize that in the profit, right? Or go and do the journal entry to your revaluation deficit, debit to revaluation deficit. So that was the case here. Okay, done with this. Done with that? So let's go and look at the accounting treatment. So accounting treatment, I have put some bonus answer here. The original question does not ask you to do that, but I have done that for you. So let's go and do another one. Another one. So that was on explanation of accounting treatment. And you can see that that was for the two types of asset, building and land. One is depreciable, another one is non-depreciable. I will focus with the next question after this.